Hey, so I want to continue with the value stocks here. Right now, we're going to take a look at these three, uh, Mc, oh, McDonald's, Walmart, and Exxon. Last time we checked on these three was about a month ago. And what we're going to do is just technical analysis for these. And then we're going to rate each one on a scale of buy, fair value, or resistance. And then we also have this purple, which you might see up here. That just shows that I bought at least a share or something with that stock around that date, just for reference. Before we get started, I just want to say if you have something news related for these stocks between uh, that point and this point, and you want to add that in, by all means do so. Or if you have a different opinion on a buy point or a sell point, feel free to share that. And, it might change my mind, sway me one way or another. But with that out of the way, let's just start with McDonald's. So, again, last time we looked at this was about 2 months ago. At that point, it was selling at 282. We had a buy point marked at 261. We didn't have resistance just because it was reaching all-time highs, and that's sort of what the note kind of sums up, that it's very high growth in the past month. We saw new highs, and potentially we want to buy the dip on this. So let's look at the chart. So this is what I was referring to with these all-time highs in the past month. Clearly we've broken that trend, so I'm just going to remove this point. Right off the bat though, we're seeing we had a resistance point of like 271. Clearly it's broken that, and now it's kind of taking this dip. What I did notice though is, number one, it looks like we're in this trend here. We could draw a upward channel that shows just the progression from about October of 22 up until today. It doesn't seem like it because it kind of stepped up real rapidly, then consolidated, and again we're seeing this big step up and trading sideways again. But let's zoom out a little bit and let's go back all the way to about 2016. It looks like we're in this big uptrend for the past about 7 years. So let's see if we can draw in what would be a just an upward channel from about this point down here in about late 2015. See if we can catch most of the lows here. Obviously, it's not going to be perfect, but should be like roughly in the neighborhood. So I'll just start it off there, and if I were to catch most of the highs, I feel like right about here seems good. We'll make that purple just so we can stick with our trend that we've been doing, and that seems to catch most of our weekly trade bars. And again, each one of these bars that we're zooming in on, that represents a week. So again, this catches most of the lows starting back from 2015, and you could even make the case that since 2014 we've been in this channel. Clearly it's gone above a couple times. Here's that severe drop in 2020 where it was clearly a good price, and then we've kind of accelerated back into the channel. We'll zoom in a little bit closer, and yeah, it's exceeded a little bit for maybe a month, dropped below for a little bit, and now here we are today. We're technically still above that trend line. So right off the bat, I still feel like this one's overpriced, but it's not as crazy as before, because before we were kind of grading it on this sideways consolidation that we were seeing between about 2021, about September of 21, all the way up till today in 23. So about like 2 years it was trading sideways. But when we take a step back and look at the past 7 years, kind of makes sense because it was getting, I guess it really wasn't overvalued. It was just, it kind of went severely up through the uptrend channel, then it dipped down to the bottom of it. So overall right now, the things that I'm seeing, and we can probably just remove these buy points. We'll keep these two in there. This one that we had at 230, that one's probably off the table at this point, especially considering the trend. Is there a chance that it could drop that low? Of course there is, but it seems less and less likely as this one continues to progress. I think what's on the table today would be ultimately like 250 would be a good spot for me. Previously we said 261. Surprisingly, I'm going to update that to 250, even though that's kind of getting to the point where it might be off the table too, especially considering the fact that we're all the way at the very top. We're actually above the trend line, and to pull back all the way to 250 by the end of the week, probably unlikely. I think what's more likely is maybe over the next couple weeks it could just progress down and we could see a real dip, and maybe we could catch it in like the mid 250s. Maybe 260 would be a decent spot, but just to kind of have a ultimate buy point today, I'm going to put in 250. We can also update the current price, which before was 282, and now it's at right around 282. So let me just see if that kind of checks out. Yeah, so right here, this little bar here, that is right when we last looked. So you can see we've popped up, and now we're pulling back. Ultimately, it's been flat. So if you would have bought 2 months ago, you really wouldn't have made anything. So that's kind of nice to see in a way, especially for us since we didn't buy at that point. So I can update the current price. It's 281.90, but we're gonna just take off the cents and make it 281. Resistance today would be right about where it is, like 280, 281. I'm just gonna call it 280. I'm gonna update the date to today. As far as our note, very high growth the past month. That's true, but we've now kind of broke that, so I'm just going to remove that. I will keep the new highs. Well, I'll say it's pulling back from the new highs. So pulling back from its new highs. Possible by the dip. Yes, we'll keep that in there. And then I'm just going to note that it's been in an uptrend since about 2015. Again, zooming back out. I marked this one from about August of 2015. You could make the case that it's been in the channel since 2014. So I guess that's what we'll do. We'll say it's been in this uptrend since 2014. We'll just say in an uptrend since 2014. That pretty much wraps this one up. So again, because it's outside of our range, starting to pull back into it, but it's clearly on the high end, so it's getting a red today. If it pulls back further, I'd be interested. But for right now, that's kind of where it is. I'm going to also add a buy point at 261. That's that green line here. There clearly was like support at 261 for a good while, from about December of 2022 all the way up till March of this year. So that seems like it's on the table. It could definitely drop down to that point, and hopefully it would get caught there and then kind of continue rallying up. So I'll add 251 and then also 261, and just so we're more concentrated on one number over the other, I'm going to bold 261 for us. That way we know, hey, if we see it at that point, that's probably a good time for us to buy. So that pretty much wraps up McDonald's. So right here you can see the updates. So currently it's 281. We're looking for 250, more likely 261. Resistance at this point is 280, but again, over time, that's going to just gradually continue to tick up. Next week, if we were to look at this, it might be 282, and those buy points might be, say, 252, and 261 will probably stick around for a little bit longer. And then our note that we put in is it's pulling back from its new highs, possible by the dip, that's still in there. And then it's in an uptrend since 2014, that's newly added. So let's now pivot to Walmart. Walmart currently, or not currently, but last time we looked about 2 months ago, was trading at 147. We had multiple buy points here at 124, 138, and 142. We said resistance at 147. So kind of a tight range there between the buy and resistance points. So interested in seeing where that one shapes out now. And then our note we had is in an uptrend for the past 9 months with sideways consolidation for the past 4 months. So we kind of saw two trends happening at the same time. Let's take a look. Let's see what's going on there. So Walmart here, let's just zoom right in to see what's going on right now. So here's that uptrend that we were referring to. This kind of looks, let me just space this out a little differently. This just wasn't super parallel. So that was more parallel, I would say. If we're going to stick with this current uptrend that's been going on since about June of last year, we're still in that channel. So I'm just going to update this to in an uptrend for the past 12 months. That sideways consolidation for the past 4 months. This is what I'm referring to right here, from about October of 22 all the way till March of 23. It really just traded sideways there for, I guess it was, I said 4 months, but I guess it was more so like 10 to 5 months, I guess. So nothing much there. Clearly we've kind of broken above that, not by much. Clearly it's dipped down below, and now it kind of accelerated up again. This consolidation, that kind of is making up our horizontal line, so that may need to be taken out at some point. We'll keep them in for a little bit longer, just until it truly does break above and beyond, sort of like McDonald's did. But for now, we'll keep it in. I want to zoom out on this one too, just to see if it's similar to a McDonald's. Let me just space this out so it's kind of the same as what it was. What's going on here with this? Oh, I see what's going on. Crap, I wish I wouldn't have done that. Let's do this. So kind of a similar story, it seems like, with Walmart, like McDonald's, where back in about 2017, you could argue that it's kind of been in this uptrend. What's different about it, though, is it seems like it's kind of undervalued. You know, if we scale it back that far, I just want to draw it in just to see how would it turn out. So we'll keep our purple trend and we'll make this long-term uptrend a yellow. So let's just start off. We'll grab this point here, and I'll update the color here shortly. Right around there, up to, gosh, I want to say like there-ish. I could definitely catch more and increase the channel a little bit, but maybe it just truly was overvalued here for a good stretch of time. We'll kind of see. I just want to keep it in for now, just to kind of, see how it plays out. We'll make it a little bit darker. Hopefully that's easier to see. But yeah, so since 2015, mid to late 2015, we entered into this channel, and then we started to see anytime it would dip, it would be very close to that yellow line. You can see it's in 2017, it dropped below slightly. In 2018, again, twice in 2018, very briefly, of course. So far, those 3 times was like maybe 2 months or less. This really doesn't count. And then here in 22, it really dipped below. And right now, we're kind of in the middle of that channel. So overall, this one might be fair value territory. And I'm grading that on 2 scales, really, because if we look at the yellow trend line, and I can zoom in here, based on the yellow channel, we're more or less, it's definitely on the upper side. So, but it's nowhere near resistance, because right now 150, resistance would be at like 155. So it is kind of a narrow margin, but $5, and then if we were to drop to the low point, that's about 137. So clearly it's on the upper half, but the channel in total is about 20, 18 to be more precise. And the fact that it's 5 away from the top, and what would that make it, 13 away from the bottom. But overall, you can see it's in the middle, right? So fair value in that point. But if we're going to stick with our purple channel, which has been going on for about a year, we're actually on the bottom of that. So whichever one you want to have as a priority, I think just for safety's sake, I'm going to give it to the yellow trend line. That's been going on for about not quite 10 years, but very close to it. About 9 years, I think. Let's zoom out a little bit more. Zoom in. So we could say since like 2015, mid 2015, all the way up till today, so about 8 years, I'm going to add that in an 8-year uptrend, which is a very positive thing. Did I put that in the right one? Yeah. Okay. Yeah, I just don't like how it's really gone above and beyond, but maybe that makes sense and why we saw this big drastic pullback in 22, and that just kind of got us back into the channel. So, yeah, I'm okay with where the channel is located, the yellow channel at least. So let's just zoom back into today, see if I want to update anything. Update anything more at least. So before it was at 147, here we are today at 150. So zooming in, this is where we were before. This green line really was flat. It peaked above a little bit, but pulled back slightly. So we'll update the current price to 150. Buy points from me, I think at this time, we're gonna, again, we'll keep the consolidation points in there, or those horizontal lines. Hopefully this isn't too messy for everybody. We do have a lot of lines here, but today we're gonna focus on the yellow and the purple. And so looking at those, the buy points for me would be, if you want to trust that purple line, now would be actually a very good time. It clearly has dipped to the bottom of that purple channel. So potentially one spot would be, I would say like 148. We're like right there. And also preferably like 137 would be the yellow channel. That would also get us in that consolidation range, meaning the horizontal lines. That would pull us back into this blue range, which again, that is like our consolidation period, fair value range. So that's just something to think about. So what I'm going to do for the buy points, which previously were 124, that would have been the green line. I think we've kind of exceeded that at this point. I also said 138, which is the upper end of the fair value range, which is this upper blue line. That makes sense. And then 142, going back to this green point, which was the last time we checked, 142 is right at the bottom of that purple channel. So I was factoring that in to a degree. What I'm going to do now, though, is I'm going to update it to 148 because that uptrend has continued forward, so it's just gradually increased over time. I'll put 148 in there. If you're waiting that purple trend line, yeah, now is actually a decent time. If you're going to give priority to the yellow trend line like I'm going to do, 137 is my point, so not much. So again, 148 and 137, those are my new buy points. So 138 and 147. Resistance at this point, similar to what we did before, about 155 if you're counting the yellow as your priority, would be 155, or if the purple, about 161. So nothing crazy. 155/161. Let me just make that a little nicer for us. 68. And I just want to zoom back out just a little bit. So one thing I will point out is when we take a look at just that purple uptrend for the past year, I mean, I would say probably realizing that that's 52 bars, we've only had 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 bars of the 52. So let's see, 9 divided by 52, about 20% has been outside of our long-term trend. So just something to think about there. So for those reasons, I'm giving priority to the yellow bar, if I didn't make that clear before. And so that's why for me, what I'm going to do is highlight the buy point that I'm more looking for, which would be the 138 in this case. And the resistance point that I'm more looking at would be, I probably am not putting either of them as resistance, but I guess until it breaks trend with the purple, I would say the 161 is kind of the resistance point that has higher weight, because clearly that would go above our yellow uptrend. So yeah, I kind of like that. So just updating our note, again, it said in an uptrend for the past 12 months. That's still true. Sideways consolidation for the past 4 months. I guess we could remove that one. Even though really long term, it's been in this horizontal range for quite a long time. I mean, we could argue our green, blue, and red lines have been active since like mid 2020. It's been in this range between 124 and about 147. Now we're starting to peak above, or we might stay above at this point. We'll see, of course. But yeah, it's been in that range for like 2.5 years. That's crazy. But overall, it's been in that trend. That's the surprising part. So I guess what I'll do is that sideways consolidation. Well, let me add a date in here. In an uptrend for 12 months, going back to about June of 22. Sideways consolidation, I'm going to say starting back in about August or July of 2020. July 2020. Whoops. And I'm going to include the range just so I keep my facts straight here. between about 124 and 147. In an 8-year uptrend, going back to how far back? About 2015. Since 2015. And again, similar to the others, I'm just going to throw in the point to buy dips. Again, great uptrend on this one. So let's just pull back into where we are now. Zoom in a little bit. But that pretty much wraps this one up. Let me know your thoughts here. But let me just share this. I think for me personally, I'm gonna give this one. I guess I'll say fair value. It makes again, sticking with my points of the 138 and 160. It is kind of in the middle, but sticking with the yellow line, it's very close to 155, which would have been the very limit of the yellow channel. So just keep that in mind. But overall, fair value. I wouldn't be opposed to buying this one, even at this point. But yeah, just to recap, currently it's at 150. Buy points at 138 and 147, with priority at 138. Resistance at 155 and 161. Priority given to the 161. And then we noted it's in an uptrend for the past 12 months since June of 22. Sideways consolidation has been happening since July of 2020, ranging between 124 and 147. And also this in an 8-year uptrend since 2015, buying the dips on that one. So that's Walmart. Let's close out the video looking at Exxon. So similar to the other two, last time we looked at this was about 2 months ago. At that point, it was trading at 115. We had buy points marked at 98 and 104, and resistance at 126, also noting an uptrend for the past 2 years. So let's see how this one's shaped up. And let's pivot to Exxon here. So big uptrend. And if we zoom into closer to today, we're at the very bottom of that uptrend channel. The thing is, I'm not sure if I like it, surprisingly. This one, and the reason I say that is because supposedly the oil prices are supposed to drop, or they're not producing as much, and if they're not producing as much, that should theoretically mean less revenue, and the profitability and the margins should still be good. It's just they're not going to be making as much money, which if we filter down to the very bottom, we have to imagine that means if during this uptrend if they were continually making, say, $2 per share every quarter for investors, well, now they're not making as much revenue, which means even though their profit margins are still the same, now all of a sudden they're making $1.75 per quarter, or maybe $1.50. You know, it's slowly getting pulled back, which means as it's not as enticing for someone to buy today. So similar to Walmart, we're going to have 2 points of interest, I imagine, once we wrap this up. But let's just kind of see how it plays out. This purple line, I think that's where we thought we would check back in, or not sure. Yellow line, that is indicating the end of the year. But for right now, let's start off with the channel. So this upward channel that we've nicely done a green point showing, that would be like the buy point, the red showing resistance, and then the blue is roughly in the middle, showing that would kind of be our fair value point. Looking at that channel alone, the buy points on that would be right where we are now. Truly, the point would be at about 106. We're at 108, so that is one buy point. And I'll just update it now. So a buy point is 106 today. Resistance at this point would be, am I going to be able to do this? Resistance today would be closer to about 131. So let's just update that to 131. It was 126. I'm also going to update the date since I'm here. So if you're of the belief that this uptrend is going to just continue on, which, you know what, it's really held up well. I'm very surprised. What I thought it was going to do is just break through and continue breaking and breaking to lows all the way down to what it's kind of been known for. And you can kind of see going back to about 2012, 2013, it's really hung out at this black line that we drew in here at about $61. It's really hung out there. Yes, it goes above, dips below, goes above, dips below. Like it really just hung out there from about, you know, we could make the case from 2012 all the way up till about 2020. So about 8 years, it really just hung out there. And now all of a sudden we're seeing this very high acceleration where it's like doubled. So let's just kind of take a walk through history. Maybe that was a little bit too far. You know, it definitely can. What did I do here? It definitely can do that. Yeah, I guess we have to go back to like early 2000s. So like in 2002, you know, it was down here, but then it just gradually started climbing till it found some comfortability right around our 61, probably more accurately around like in the 50s. It dipped below again, got caught back up, and then it just hung out there for 8 years, ultimately crashing in 2020, kind of recovering, dipping back down, and now here we are today. Yeah, I'm not sure what to make of it. I guess it makes sense that for 2 years, I mean, we've been on that uptrend. Why should it break now? You know. So I guess let's just update our tracker here, and then we'll see how it plays out. So let's zoom in a little bit more. So last time we checked was here. It was at about 114, 115 is what we have on our spreadsheet. So it's gone a little bit below. Whoops. Didn't mean to do that. That's about where it was. Let's zoom in a little bit. Yeah, honestly, I kind of thought this one would break down below. So I'm just not, me personally, I'm not comfortable in getting into this one at this price. I don't know, just for whatever reason, I'm giving a lot of weight to how it hung out at 61. Maybe I just have old beliefs that aren't accurate today. But yeah, I'm just giving a lot of weight that, again, maybe I shouldn't be. Let me know your thoughts on that if you're, you know, if you're more in the know with this one. But yeah, let's just update. So right now it's at 108, so it has dropped a little bit, has dipped. Now would be a great time to buy if you're certain that this uptrend is going to continue for years to come. Now is a great time. It's just for me, I feel like I just don't know. I do not know. It kind of makes I could make the argument either way. It's just for whatever reason I feel like it's too risky. At least for me. Like I just worry that I'm gonna buy at this point and then all of a sudden the floor is gonna drop and we're gonna crash down to the 80s or something. Will we crash down to this 61 point? That might be too low. I don't know. I don't know, but so what I'm gonna do for now is I'm gonna add 61 as the buy point. We did kind of catch ourselves at 82. That's why we marked this point in here. Looking back up to 98, we caught ourselves there. Geez. Yeah, I'm kind of speechless on this one. I just don't feel confident buying right now, even though it is a dip. Like, I'll need to look into this one. Overall, it does make sense. I'm just gonna call it as I see it. It's just I'm personally not gonna be buying this one, but the way it's playing out, yeah, this is a perfect opportunity to buy it, especially if you think it's going to continue this trend for the rest of the year. I think that's reasonable. And you could see a decent amount of opportunity there going from about 108 to 124, which would be the very bottom of the channel, about 124, 125. That's a decent amount of growth. I mean, let's just check that out. We'll say 125 minus 108 divided by 108. That's 15%, 16%. So if this trend continues to the end of the year, great. You'll make decent profit on it. And then if it ends up dropping, hopefully you pull out before it drops significantly. But yeah, I guess I don't really have much to add on that at this point. I guess the note that I want to add in is the reason for the 61, just so I don't get confused when I circle back on this. 61 is noted due to its consistent fluctuations around that point for years 2012 through 2020. And it's also a dividend stock, so that's positive. We'll wrap this for us. Again, I probably won't buy this one just because I just don't have the most confidence in it. But, you know, again, if you know more and you want to add, you know, give me a little bit of a better understanding of why this one's done what it's done and why it wouldn't drop like I'm kind of thinking it will, feel free to share that opinion. I'd be happy to read it and hopefully make a little more sense of it. But yeah, that pretty much wraps this one up. So Exxon right here, just a quick summary. It's currently at 108. We have buy points marked at 106 and 61. Also resistance at 131. So again, those two numbers in the hundreds, that's the channel. 61, that's my like red herring point that I'm kind of wondering about. Updated the date, and then that note, been in this uptrend for the past 2 years, so why should it stop? But we also have that 61, and we're saying it's noted due to its consistent fluctuations around that point for the years 2012 to 2020. So I'm just kind of the belief that it's at some point it's going to pull back to that range, but I could be wrong. So yeah, that pretty much sums this one up. Probably won't buy any of these three at this point. Possibly when we circle back. The one that has me most intrigued, obviously, is Exxon. If I had to buy any one of these, it would probably be Walmart today. But again, I feel like we're going to find other opportunities out there, so probably won't buy any of these at this point. But let me know your thoughts below. Otherwise, please like, subscribe, and I'll see you on the next one. Bye.